Hello, everyone, and welcome to Elevate Your Business. I'm Ed Jarecki, and I'm thrilled to guide you through today's episode. It's designed to inspire and empower you on your journey to business success. Today, we're excited to have with us Will Matheson. Will is a co-founder of Matheson Capital. With his master's from Columbia University's Real Estate Development Program, he oversees the acquisition of multifamily properties in the Southeast U.S. and California. As Will joins us on the show, he'll shed light on what success means to him personally and how his definition has evolved over time, as well as one or two of his top challenges and the lessons learned associated with them. And finally, for today, we'll explore how Will has leveraged innovation in his business and other work to overcome challenges and achieve his goals. So let's welcome Will Matheson. Will, it's great to see you again. How are you doing?
I'm doing well. Thank you for having me, Ed.
It is absolutely my pleasure. I think what you're doing is great, and I know it's a really tough market out there.
It's not the easiest one there's ever been, but I've been saying for the last year or plus, you get burned when the market's hot, and the market's definitely not hot right now. So I do think it's a good time to buy, but it's very hard to buy.
I've actually heard that. So to start with, could you share a little bit more about yourself and your business?
So I run Matheson Capital with my twin brother, Evan. We are a multifamily investment firm based in Charleston, South Carolina, with a focus on buying assets in North Carolina, South Carolina. Our most recent acquisition was Georgia. And really, that's where we're focused right now. No more California, not since 2018.
Oh, okay. All right. Any particular reason?
It's California. Need I say more? No, it's just the regulatory environment is incredibly onerous to landlords. We had a very bad experience. On our second acquisition in California, we had an offer in February of 2019 to sell the property. It was going to be very nice. And we owned in Inglewood, California, which, for those who don't know, famously does not have rent control laws, which makes it a very desirable market. And then in March or late February 2019, the city of Inglewood passed a rolling 45 or 90-day rent control. We had an offer for $2.1 million in hand, turned it down because we wanted to finish our renovations. That rent control law hits. We end up selling 6, 7 months later for 1.925. We're talking a leveraged asset, so we lost well over 10% of our profit just because of the uncertainty that introduced into the market. And franchise tax board was total pain. Just not a place I want to invest.
So you've had a heck of a journey so far, and that's an incredible story. Thank you for sharing that. How do you define success today?
I use a very simple definition. I was actually discussing this with Evan before we started today, and that was success is the ability to accomplish what you set out to accomplish. Obviously, your definition of success can change over time. Your definition of what constitutes even a successful deal, is going to change over time, even if it's the macroeconomic environment that's changing. So I'll use an example. We bought a lot of properties in 2020, 2021, and we sold them all at the beginning in March of 22, December 21. Our timing was phenomenal, but we picked up another property April of 22. Very confident, liked the property, phenomenal basis, but we've executed our business plan. I don't think we're going to be able to hit the returns we wanted just because the sales environment 3 years or 2.5 years later is just not the same. But we set out, we achieved what we wanted to on the operational side, growing revenues, but sale market is what the sale market is. Now, that's just an example and just at a very high level. If I set out to do something, if I'm able to hit those benchmarks, that's a success.
So you already started to allude to this. How has your definition of success changed over time?
So I want to say when it was very easy out there, 2018, 19, 20, 21, the only thing you can really focus on is, am I buying, sell, buy, sell, buy, sell, realize the returns, which I'll be honest, we did pretty successfully. Like I mentioned, we sold pretty much everything at the end of 21, beginning of 22. And now, as we're sitting and looking at holding properties for longer periods of time that we've established a track record, it's more so about, can we hit these operational goals? Can we accomplish X, Y, and Z? Because you couldn't underwrite for the sale environment that we're entering back when we were coming out of the sale environment of 2021. We're focused on the day to day as opposed to the end of the tunnel, so to speak.
And so through that journey, as we talked about in our previous conversation, it's never an easy journey. What are one or two of those challenges, those top challenges you've experienced, and the lessons learned that we can pass along to our audience?
So I remember when you and I spoke a couple of weeks ago. This doesn't directly pertain to how we measure success currently, but I was very upfront. The issue we always had as a company was raising capital. That's been the number one struggle we've had. And we had to completely reshape our entire strategy going out. I remember going to conferences and leaving grad school, and you would meet these people who wanted to get into multifamily, and they would say, I'm going to buy 200 unit properties, $20 million, all these things. Like that's where they would start out. And I like to feel like my brother and I had pretty good credentials. We were brokers at Marcus and Millichap. We worked in commercial real estate, went to a nice grad school, met a lot of successful people in our year in New York. But we just had to sit there and say, we can't raise this money. So we were starting out buying 2 unit and 6 unit, 6 unit, 15 unit properties, things like that. And we would do very short-term holds because we knew once someone invested once, we needed to free up their money so they could invest with us again. But by doing that, it allowed us to grow our investor base, have a proof of concept, recycle investor capital, attract new investors. To summarize a very long answer, raising money was a huge problem for us. And to overcome that issue, we had to start with very small amounts of money and do very short-term deals.
I think that's excellent. That's great feedback. Any other key challenges and lessons learned?
Well, there's too many lessons to really list. I mean, there is a lot of stuff going into any business, and you know this as well as I do, where there's just a lot of things you don't know that you don't know. And that was one of the nice things about working out on small deals when we got started. We would learn a lot of mistakes that maybe would have been a much bigger problem on a larger deal. And you could say the timing of the market helped us, but coming from being a retail broker or coming from an academic setting, there's just so many things where again, you don't know what you don't know, and you learn lessons in entrepreneurship every single day.
And so you run into them and then have to figure out how to pivot and deal with them.
Yeah, I'm a pretty open book. When I meet with investors and they ask me about what are some of the challenges, what are some of the issues you've had, I'll literally talk about every single property we've ever bought. Say, this is what we did well, this is what we did poorly, these are the mistakes we made, this is what we would never do again. I mean, again, on a property specific basis, I'm an open book on that stuff.
Yeah, I get it. And I appreciate that approach. So, from an innovation perspective, how are you leveraging that to help drive your business?
So I will say on the innovation front, one of the things that Evan and I are very adamant about is we like to subscribe specifically to underwriting software, which is not something where you get property information, you funnel it into a machine, and it gives you all of the answers. But there are services out there, Red IQ. We currently use a product called Archer. They aggregate data for you. They're essentially, I don't want to say error proof, but because they are very sophisticated financial modeling softwares that have an entire product, backend, customer support, et cetera, it reduces the amount of risk that is coming if you make your own financial models. Because if you make your own financial model from scratch every time, there can be an error in there that can be very hard to trace. But like I said, Archer in particular, I'll give them a shout out. It pulls comp data, it pulls operational data, it pulls market rent forecasts. That's probably the biggest technology driver we do. Otherwise, we believe our management partner, Stantino Management, they're very, very cutting edge in terms of automation, in terms of property level
Okay.
management. And I would be remiss if I even tried to explain everything they do. There's a reason I buy the properties. There's a reason they manage them.
Yeah, absolutely. And there's one other area, and I'm not sure this touches your business, but there's also the innovation area relative to the technologies that are being used to develop properties, different materials and stuff that are being used for renovations and stuff like that. Has that played into your business at all?
So I will say it has not played into my business directly, although I will say I think that is a fascinating area that I'm excited to see where that goes. I can't remember. I've seen recently two new construction materials. One of them is essentially, I mean, they look like life-size Lego blocks. Have
Yes.
you seen those?
Yes.
And there's another one where it's essentially Lincoln Logs. So you can build your own cabins and things like that. I think that stuff is so incredibly fascinating, and I want to see how those products and techniques develop over time.
I do too. They're composite materials, so they're faster, easier to produce, stronger, more structurally stable, better R values, quicker and easier to assemble. And some of those building blocks actually have electrical run lines, your plumbing channels, everything is embedded. And even the plumbing and stuff like that can be embedded so that when you design it, it's built in the factory and literally whoever you've got assembling these things on site, it's almost plug and play. And it can actually
It
reduce
is,
the time by 75% in the setup and ready to live in time.
yeah, it's like a real life Lego kit. It's really amazing. Another thing, again, this doesn't have to do with my business per se, but I will actually be fairly upfront and say that I don't really consider myself much of an entrepreneur. I feel like I'm using a copy paste formula. I find a property, I raise money from investors. I don't feel like I'm inventing anything new, except an LLC every time I buy a property. But one of the other exciting things in real estate are, I think, tiny homes.
Yeah.
I think tiny homes are fascinating. It's really better described as an old development. I'll use this as an example. Did you see the Elvis movie a few years ago?
No.
Okay, it's a good movie. They show him growing up in the 1930s, and he lives in a shotgun shack, and there's this whole row of shotgun shacks. And controversial opinion, I think zoning laws that have set minimum house sizes and minimum lot sizes have been absolutely terrible for housing affordability because people say, oh, well, that's no way to live. Well, easy for you to say if you're buying a nicer house, but these tiny home developments, you can now buy a tiny home from Walmart for like $10,000. There's other services where you can buy these things. It's affordable. You can make it in no time. I just think those are a tremendous, tremendous thing that is coming along because the median home price has tripled in the last 20 or so years when the median income has only gone up by, well, it certainly hasn't tripled. I can't remember the
Yeah.
exact
20, 30%,
amount.
it's not that much.
Yeah, but I mean, housing prices again, median home price has tripled. There's other reasons for that, but it's hard to build a new house for $250,000 today.
And that's a small house.
So, it, but if you're using these prefab or offsite construction delivery, like I'll be honest, I just bought a house in November. It was a house from a Sears catalog in 1926.
Really? That's awesome.
Yeah,
I work for Sears. That's funny.
yeah, I will tell you, I bought the Garfield. It's in a nice area of Charleston, but it was 1926 house. It's still standing. But Sears, the original Amazon, the fact that, people are bringing that back, you can buy a house from Walmart, whoever, I think it's phenomenal. I think it's very innovative. I'm not the one doing it, but I'm glad people are.
And my understanding is there's over 7 million people in need of affordable housing across the United States. That's just an astounding number.
I mean, look, is there such thing as housing being too affordable? No, there's not. And I will say, the markets we invest in, the Southeast, part of the reason for their success, not only, I mean, economically, the political environment is very beneficial economically, but a huge driver of housing affordability. The Northeast, California, they're just expensive housing markets. You see all these headlines if you follow the apartment industry. We all know there was a huge bump in rent in 2020, 2021, but a lot of Sunbelt markets are faltering because we're seeing some of the biggest new supply hitting the market for apartment complexes. And lo and behold, supply and demand works. All these new apartments are making it so rents are falling or flat in a lot of these markets, which is great. It's great for the consumer. It's not necessarily great for me, but you know, in the long run, the Southeast is going to continue to benefit, or the Sun Belt, I should say, will continue to benefit just by these trends and allowing these new developments and allowing more workers to move here and more companies to move here because it offers a better quality of life and standard of living for the workers.
Great insights. Final takeaways for our audience. If there was one thing that you could tell other business owners, you really need to consider this as part of your business success, what would that be?
So I think there is just so much importance to starting small. Like I said, we knew we couldn't raise a lot of money, and I essentially work in private equity. where the amount of money you raise is one of the biggest drivers for success. But we couldn't raise it, so we had to start small. I was on the phone with a guy literally yesterday. He's getting into the business. He just left his old company, starting a new one with a partner. And I was telling him, when you're just getting started, you're not too good for a 30 unit property. You're not too good for a 20 unit property. If you can buy a 200 unit property, do it. But you need to buy something. You need to go out and do it. And if you start small, the checks are smaller. It's some people don't have to. I'm jealous of those people, but
Me
you're
too.
never too good for your first deal. It's like
Yeah.
your first, it's like how they say the first job is the most important. That teaches you so much. Your first deal, I learned a lot on my first deals. 2018, 2019, learned a lot on those, and we got better and better in 2020, 21, and onward.
Outstanding. Any final thoughts?
I mean, I think I covered just about everything.
Awesome. I want to thank you all for joining us today, with a special thank you to Will Matheson for sharing his insights and success tactics. We hope you feel inspired and motivated to tackle entrepreneurial challenges with innovation and adaptability. Remember, success is personal. Define it for yourself. However, consider the insights shared by Will, and of course, always seek to embrace change, seek growth, and adapt to the ever-evolving business landscape. Thanks again to Will and all of our listeners. See you next time as we explore more entrepreneurial stories. Stay resilient, stay innovative, and have a wonderful day, everybody.